April 15th is the deadline for funding your 2023 individual retirement accounts, also known as IRAs. Here to break down everything you need to know before the cutoff date is Deborah Grinstein with Farmers Trust Company. Deborah, good morning.
Good morning, Melina.
All right, so we've been talking about it all morning long. While the eclipse may be a rare occurrence, there is a bit over a week to go before tax day on April 15th in Ohio. We want to know, can you still fund your IRA?
So yes.
Okay.
Every year the IRS gives us an extra 3.5 months to fund our IRAs. This is very important. So this is the last week you can make a contribution to your IRA before the opportunity eclipses.
Ooh, you see that?
So don't forget if that's something you need to do. And for 2023, you have up to $6,500 available to fund your IRA if you're under 50, and $7,500 if you're over 50. This is called a catch-up provision for those of us who are a little older who are seeing our retirement closer to us.
Okay.
And you can open an IRA account at a bank, at a brokerage firm, or any financial institution.
Okay. So what's the difference, Deborah, between a traditional IRA and a Roth IRA?
So a traditional IRA is what we call a tax-deferred account. The money you make, you put it in the IRA, you don't pay tax now, but later when you retire and you take those funds, that's when you're going to pay the tax. Versus a Roth IRA, which you pay your income tax on your wages now, and when you take it, if you take it, then that money comes out of your Roth IRA tax-free.
Okay, so let's move into this year.
Right.
Funding your 2024 IRA.
Correct. Now, just because it's April 8th today doesn't mean you can't fund it anytime in 2024 up to April 15th, 2025. And the limitations for this year is $7,000 if you're under 50 and $8,000 if you're 50 and older. But beware that you need to make at least that amount of money to be able to fund your IRA.
Now, can you split your contributions between the traditional and the Roth IRA?
Yes, you can.
Nice.
Yeah, so you can't go over that $7,000 amount or the $8,000 amount, but you can split them. And there are also specific rules if you have a 401k, if you are in some kind of employer-sponsored plan. So that I would tell you that you would have to consult your financial advisor for.
Okay, and I understand there's some rules when it comes to withdrawals.
Yes. So, you know, there are a lot of exceptions for withdrawals, which we won't get into today, but at 59.5, you're permitted to receive distributions from your IRAs, either Roth or traditional, without penalty. Yes, you might pay income if it's a traditional IRA, but you don't have to take out a required minimum distribution, which is called an RMD, until you're 73.
Okay.
And those rules changed last year. It used to be 70.5, and now it's 73. And those begin with a traditional IRA, a simple IRA, and a SEP IRA as well. Now, there are calculations for that as well, depending on your age. But owners of Roth IRAs do not have the same required minimum distributions, and they do not have to take out any money if they don't want to.
Got it. Deborah, thank you so much for sharing this with us. If you would like to learn more or learn more about a rollover and why you should maybe do that, you can call the number on your screen or just shoot us an email at farmers@wfmj.com. Now let's get a check of our Monday forecast with meteorologist Jody White.
Yeah,
hey, Jody.
Hello. Today is